I am a busy guy and I don't have much time to analyze the chart or read finance and investment news. I need a simple strategy for swing trading. Can you backtest my trading strategy and tell me whether I should use it or not? Hello and welcome back to Trading Strategy Testing. There is always a need to learn more about the best stocks, Forex and commodity trading strategies, which is the purpose of this channel. We enjoy trading, we just wanna teach it with live market actions. One of our subscribers sent us a swing trading strategy. It works for him, but he wants us to give it a try and see. But before that, if this is your first time here, consider subscribing to the channel and give this video a thumbs up to help the channel grow and encourage us to make more content in future. Let's get started.
Here is the summary. We will introduce the strategy, show some examples from the chart. Once done, we will start backtesting and answer an interesting question from the comment section. The strategy today will teach us an important lesson that many traders only get after blowing up many accounts. We will be glad to share it with you at the end, along with our strategy backtesting results. The first indicator is MACD. It is a trading indicator used in technical analysis for Forex or stock or indices prices. MACD is designed to measure the characteristics of a trend. This includes its direction, magnitude, and rate of change. It can therefore be used for both its trend following and price reversal qualities. We have tested this indicator 100 times previously on this channel. Feel free to check out this video later on if you wish to know more about it and how it could be used for daily scalping. The second indicator we will use today is the 200 exponential moving average. We have used this one on different videos in the past. The 200 EMA acts as a strong support and resistance. It usually identifies whether we are on an uptrend when the price is above it, or a downtrend when the stock or a currency pair is trading below the line. For more information, you can check out the video we have made in the past where we traded this indicator 100 times. We will use the Heiken Ashi chart today. It is a type of trading chart that originated in Japan, and it's similar to candlestick charts, as the color of the candlestick denotes the direction the price is moving. Even though the candlestick and Heiken Ashi charts look similar, but the Heiken Ashi highlights the average price moves, creating a smoother appearance. We have made a video testing a daily scalping strategy involving this chart in the past. The video went viral, and the engagement was massive, which is understandable as this chart helps traders filter out many false signals and define the overall direction of the trend. The strategy suggested by the subscriber is pretty simple. When the price is above the 200 EMA and MACD lines crosses below the zero line, we will count 3 bullish candles, then go long. The stop loss is few pips below the 200 EMA line, and we look for a 1 to 1.3 risk to reward ratio. On the other hand, when the price is below the 200 EMA and MACD lines cross above the zero line, we will count 3 bearish candles, then go short. The stop loss is few pips above the 200 EMA, and we should be looking for a 1 to 1.3 risk to reward ratio. Let's look at some examples. The subscriber asked us to use the 1-hour time frame to trade this strategy. He mentioned that he is a busy person, and due to the nature of his job, he is unable to monitor the chart on a regular basis. Feel free to stop the video if you wish to spend some time studying the 2 setups. We can also look at some examples from the chart to make things easier for us. If the price is above the 200 EMA, we can just keep an eye on the part below the MACD zero line to capture a buy signal, and vice versa. This is usually the most basic and common use of MACD indicators, and this strategy is quite popular within Forex, stocks, and even cryptocurrency traders. We always encourage our subscribers to submit their trading strategies and ideas so we can backtest them. Usually great strategies are simple, easy to implement, and could be summarized in 1 or 2 sentences. Each trading strategy should have a clear entry, exit, and preferable and a recommended financial asset or market to trade it. Let us know in the comments section if you have any questions about this strategy, and don't forget to give this video a thumbs up if you enjoy this content. Before we start backtesting, we will invest a $1,000 initial balance with a 2 micro lot fixed trading volume, as per the request of our subscriber. Your investment should be aligned with your trading strategy. If you are trading stocks or cryptocurrency, you would eventually need more funds, especially if you are a swing trader, and there are other factors to consider as well. You can download your free copy from the link available in the video description. Alright, let's begin backtesting. Throughout my experience mentoring students, I noticed that some of them decide to give up their strategy if the first 3 or 5 orders hit the stop loss. Well, many successful strategies tend to have consecutive losing trades, but the main important thing is to keep on testing till you have enough data to make a decision. We should also use a reasonable risk level which allows us to keep us in the market even after a certain number of consecutive losing trades. Well, let's answer some questions from YouTube comment section. We always receive interesting questions, and it's hard for us to choose the one to answer in our video. But we do our best to answer all the comments, so feel free to leave one if you have any doubts or a strategy you wish us to test. The question today comes from Jake, who is wondering why we don't close a certain percentage of our position when the price is heading towards the stop loss. Well, if you want my personal opinion, I would say that the biggest challenge many traders face is the psychological one. I can't count the times when a clear losing trade turns into a winner. I advise my student to only enter the market when all the odds are in your favor and you are almost certain that the price will hit the take profit. The best way is to have at least 4 supporting factors before entering any trade. You can watch the video we made on this topic and how we managed to increase the chances of hitting the take profit exponentially. The link will appear on the screen now. Well, the only thing to adjust after placing our trade is the take profit when we are about to hit it, as part of our trailing stop loss strategy. Regarding the stop loss, we should set it up in a way we won't have the need to adjust it afterwards. Let's get this video to 1,000 likes to encourage us to make a video where we see whether adjusting the stop loss could make us more profit or not. We have just finished backtesting the strategy. We had to trade 6 different currencies as we didn't have enough trades to make throughout the period of time we cover in this experience. Before we release the result, kindly give the video a thumbs up if you enjoy this type of content. We really appreciate it. Well, we have managed to make $118.96 after taking 100 trades across a 10 months period of time. The win rate is 51%, which is okay, and we turned our $1,000 initial investment to $1,118.96. Even though the strategy has made a profit, and yet we still don't endorse it in its actual format, we have encountered various strong trends, but the strategy fails to ride those trends and only capture a small portion of the profit. The strategy could be much profitable if we use the ADX indicator instead of MACD, but we need to backtest this strategy first. Let us know in the comments section whether you want us to make a new video where we try to improve this strategy, and feel free to suggest a strategy you want us to test next.
Wait, we have got a little surprise for you guys. As per your request, we are going to start a new YouTube series where we grow a small Forex account together. We are not sure of the balance you want us to start with, so we created a poll on our Facebook group to get your opinion. If you are not in the group yet, feel free to join us by clicking on the link available in the comments section. Thank you for watching and happy trading.